Again, we're going to try to pick highs and lows using Fibonacci numbers, extreme Fibonacci extensions in particular. But before we apply any Fibonacci numbers at all, we want to make sure we kind of have some idea as to what we're looking at in terms of patterns. Here's a 60-minute chart, all sessions of the S&P. Now, the open is somewhere around there, okay? But let's see what happened prior to the open. In other words, what came into the open? What was there prior to this pattern as we saw price action coming up into the open? Well, we had a high over here, and it came down, now it went below this pivot low. Okay, prior to that, this pivot low, higher than that pivot low, higher than that one, higher than that one, higher than that one. Okay, you got super shallow here, and then, okay, anyway, so all of a sudden, you have a lower low coming from a lower high. Interesting. What happens next? Now you've done it. This becomes a lower high, lower low situation here, okay? Now, once you have a lower high, lower low situation, what does that mean? Well, if we're going to borrow from Elliott wave, that means we've started a downtrend. Now, before you scream and say, Elliott wave, I don't like that, that's too complicated, all I'm saying is what Elliott talks about is a 5-wave pattern. 1, 2, 3, what's next? 4 and 5, right? Before it's done, the 5-wave pattern should happen, okay? Or it can go straight above here and do one of those wacko situations, okay? That may happen as well. From a lower low to a higher high, that does happen, okay? Now, if that were to happen, what you're saying is what was over here was driving it so strong to the upside that it will blast through this high and that high, okay? If this thing were to not blast above that high, for those of you who like trend lines, we can connect one high, two highs, and have some sort of trend line protection where this thing won't break above that trend. Actually, it did, but it won't go above it, okay? And that is playing into the presumed pattern of lower highs, lower lows. This high should be lower than that high, like it's lower than that high, down to a new low. This is lower than that low, this is lower than that low. This pattern should play itself out, 5-wave. We got started already, and then we should do this. Now, again, whether we're going to stop here and turn down or keep on going up, what are some of the things that you can eyeball just to have some of the odds in your favor? Well, you can observe this first measure move as a start. What do you have here? Well, you have a deep retracement, almost 78% deep. But how is the skewing here? The skewing seems like it is skewed to the right. Here's a pivot high that will pull down. It's closer to here than there. Skewed to the right. Okay, that's the first thing. Second thing you might ask is, this is kind of a secondary thing that you may ask, you may not need to ask that, but what is it that drove price action up from here to here? For us to ask whether it's going to keep on going up or whether it's going to turn down and do that 5-wave pattern. What was this low? What was driving this low, the move from that low up to that high? Well, traditionally, it has to be what? Fibonacci extensions, right? Okay, fine. I'm going to take the first 261 here, and I'm going to do the supporting structure. Is it this one? Okay. Now, again, the very, very first combo, if you will, is what? Is a 261, 261, 261 combo. Okay. You can look at this way here and say, well, once it gets down here, I'm going to be buying it. Well, actually ran out of time. Okay. But what we're saying is, you're not even hitting the 261's combos yet, let alone 261, 361, or 461, none of that type of stuff. For some mysterious reason, it found itself up here. Okay. That's another way of saying is that it has no business being up here other than to be a 0.4. 1, 2, 3, 4. From 0.4 down to 0.5 of a Fibonacci number, and it has to go below here, all right? So that's kind of like the overall theme that we're looking at. This point C skew to the right. There's no rhyme or reason this should be bouncing this high except to allow you to short it, if you will. So that's sort of like one way of looking at it. Another way of looking at it is, of course, the day session only chart. Day session only, let me go to the 30-minute chart, get a little more detailed information here. Similar type of thing, okay? This hasn't reached 261 yet, but for some reason it found itself gapping over here. Now, think of the gap theory. Once it closed down over here, if it gaps up, it should come down to close the gap, in this case, and then some, right? In the day session only chart, this is also looking like not that deep of a retracement even. So there are a lot of reasons to think short. Okay, and again, I'm going to look carefully on this 30-minute chart and observe these patterns here. Okay, how is this looking, retracement and skewing wise? Skewing slightly to the right. How about here? This is still skewed to the right. Okay, it should at least skew to the left before bouncing. Well, it didn't do that. It just somehow coming off this right skewing, it's find itself up here somewhere. So you can think short from the perspective of, hey, there's no reason why this should pop up over there, and we're looking at it from both the day session and the all sessions. All right, so that alone tells you that, we might be setting up for a possible short. In this case, this cannot climb that much higher. There was no reason for this to drive it up. There's no things driving it up, I should say. In the all sessions, same thing. Okay, as this thing was making its way higher and higher, I'm going to look at some of these retracement percentage. Okay, and again, I'm just going to, this is just a rule of thumb. Okay, I like the 78. Now, is it this 78 or is it this 78? Okay, well, this is again, we start off with first thing first. You start with this one first, and then that one. But with retracements, I'm not sure. It's in that zone, though, okay? In that 1112 zone to 1114.5 zone. Okay, knowing that to be the case, and that's similar to the trend line, holding this thing in check. But again, you can't do the trend line, otherwise you get a little early here. You got to see how these things unfold first, okay? And we'll look at that right now. So we know we want to short somewhere up here, maybe over here, but anywhere here would need some sort of, shall we say, local patterns to hold it in check. Let's do the 15-minute chart. Okay. So as this thing's making its way up throughout the evening and into the early mornings, we see that we have this pattern over here, about 61% deep. Okay. Now, this time range still being controlled by this one. This one's a little iffy, okay? This one's a little skinnier. This one's a lot wider. Wider than what? Wider than these guys. So I'm going to draw it like this, but not wide enough to outdo these two guys over here, okay? So now you got to watch out for this one here, because this one got wider, and therefore he may be a troublemaker in terms of getting you short. Okay, but we'll watch that in a second. Now let's just do the dominant and the first level to start off with. And to do that, by the way, okay, let me just do it first. Okay. Okay. Let me do that combo thing again. Okay. We're going to start first thing first. And by the way, once you see the first combo or somewhere around there being hit, you want to look for local moves to see if that's going to hold in the big, in the big picture or not. Okay. First combo, 261, 261 combo right here. All right. Will that hold? Well, let me throw in the next level. Now the next level I'm going to extend up is this one right here. How's the retracement? About 61%. How's it skewing? Pretty strong to the right. We got to use this guy's 261 at the very least. Okay. As we use this combination, mathematically speaking, right around here, there should be a drop. Was there a drop? Sure there was. Okay. How big of a drop? Well, it made its way down to here. Now, why did it not go all the way down here? Let's observe this piece coming in. Okay. Now, I'm always going to look for trend strength or lack thereof. So by looking at the strength of the trend over here, what do I see? How does it make its way up there? Shallow retracement, kind of a blah, blah, blah. Hey, this is a pretty good one. This is a right-handed skewing right over here. But as it starts moving down, which it should, is it going to be a strong downtrend, a down move, or a weak down move? Well, you got to observe it. You got to watch it and see. As you watch it on this 5-minute chart, it was going down. Down means what? Lower highs, lower lows. There you go. But how come we're not making any new lows? Okay, we made a new low over here, but then a new high over here. Okay, down you go. Okay, fine. All of a sudden, 8:30, there's some news items over here. Okay, now when all that's going on, what's being made is this wide time range right here. If this thing were to go through, okay. Remember, this thing did not go through yet. Okay, if it were to go through right over here, then what do you get? You get this wide time range. How wide? Well, wide enough to knock out this guy. Well, he was never an issue, but wide enough to knock out this guy too. With this guy being knocked out, we can't use him for extension anymore. We're going to throw him away. Okay, but if we look carefully, are we still controlling this guy over here, 2-to-1? Borderline. Okay, borderline. Now I'm going to go back to a 15-minute chart. And now here's what we're going to shift upwards. What are we going to shift? I'm going to shift the first one. Okay. 2 and 3. All right. Will there be a short right in between? Now remember, there's no third number here yet. Okay. And if you look at it carefully over here, what we're seeing is shorting right here. Could that be? Can we do the average of these two and short right there? How do you know? How do you get the answer to that question? Here's how. You look for the third pattern. Now, where's the third pattern? It was this guy here, remember? But he's wiped out already. So now we got to look for this guy as the third pattern. What does that third pattern look like? Well, geez, he's looking like he's a shallow point C. What else? He's looking like he's skewed to the right a little bit, okay? You'll be a little too hasty to short between these two numbers because it seems like it's going up strong at this moment in time, which is the mathematical average. And there is no third extension right here. Let's take a look at it right in between here. Maybe a little higher, maybe a little lower for a possible short at this combo, 361, 261 combo. I'm going to go down to the 5-minute chart again and see what's between those two lines. Actually, there was a reaction right there. That was it. That was it, okay? And then it started to move up. Now, once it did this, you have to be careful, okay? Because now you made another higher low, higher high right there. Okay, so with that in mind, you figure, I think I better go back to my 15-minute chart and not use the 2 and 3. Let me use the 3 and 3. Okay, now when you use 3 and 3, the average would be right here, okay? In fact, I did use these two, and I shorted right there 11 and a half, 11 and a half, okay? Which is right in the middle right there. I did get short there because I was a little enthusiastic trying to hop on board. But is that really a good combination? Remember, this pattern is pushing up pretty strong, okay? Oops. And we're looking for local patterns to tie it in. What will be there to tie it in? What should be there to tie it in? Well, again, I'm going to look to the 5-minute chart just to see what transpired over there. Now, coming into this double pink line, the double pink situation here. How did we come into this double pink situation? Like I said, this guy showed up. Well, is he deep or is he shallow? He looks like he's shallow. Will he terminate right here, or will he need to at least go further and play himself out? Let's check that guy real carefully. Okay. Is he deep or is he shallow? He is super shallow. Okay. Coming off a super shallow retracement, and let's observe what happened. Not only is he super shallow, how is he skewed? To the right. Would you want to go short here? Well, I did, because I said, give it to me, stock it to me. Okay. But really, you want to let it go a little further. How much further? At least the 261, right? At the very least. You got to let it play. This thing wants to at least tag that number because he's coming off of super shallow right-handed skew. Okay. Now, if I were to lean on this number, I'll be shorting a little higher. You know, to average this number in, I'll still be shorting a little higher. In other words, this in itself needs to reach this 261 before he's happy. Okay, he's right-handed skew, super shallow. If you were to look at this in a naked form, he wants to tag this number by itself. If you were to say this number needs to be averaged in with these other numbers, you're looking at shorting a little bit lower. Okay, so that's what we're doing with this combo. Now, you go back to the 15-minute chart. Now, if you say, well, the 3 and 3 looks kind of strange. Remember, I am not using this guy. This guy is not contributing anything in terms of extension extreme, okay, because his 261 is way up there. So he's worthless. It's this little guy over here that contributed some final situation here. And he's telling us we should go a little higher. Okay. Now, if you were to go higher and flip this one to a 461, then you'll be averaging these three numbers for that high. And guess what? You would hit it right in the nose. Now, if you're a little aggressive like I am, really wanting this to get in, then you'll remain at the 3 and 3 instead of the 3 and 4. So the moral of the story is this whiter guy shows up, knocking out these two guys. Okay. Remember, if this guy did not knock out this guy over here, then we could have used this guy and extend him up and look at his 261. Okay. But because he's knocked out, we're forced to, well, at least we're not going to take the 3 and 3 or some of the earlier combos. 4 and 3 would be sandwiching this number here. Now, you might miss it by a tick if that happens. If you were to remain 3 and 3, now why do I remain 3 and 3? Because the dominant and the first level isn't very shallow. This is deep and this is even deeper. This is similar to the pattern we're seeing on the daily chart of October sugar, which I did earlier in the swing trading webinar, okay, as to how it's coming into a high. So that's how, now if you, again, this will get you in a little earlier. If you get the other way, you get a little, you can point it, hit it point blank, okay. Now, looking at this pattern from a larger 60-minute chart perspective, remember, if you know this pattern needs to play itself out 5 waves, this needs to do this before this pattern is at least played out, okay. So with that in mind, you got this to go down here if you want to play it all the way through. Now, in order for it to get below here and then some, what needs to happen? It needs to come down very strong. Let's take a look at what strong means on a smaller time interval chart. We'll start with the 3 and see what we need to do. Okay. On the 3-minute chart, this thing started coming down. The first thing to do is watch out for this low over here. Once it got below there, on this 3-minute all session chart, then you can say, all right, is it coming down there strong or weak? How did it get down here into the 78% zone? Well, this is bar to bar only, okay? And then once you get to over here, if you write out a pivot, which I didn't do, this is a super shallow pivot, and guess what? That's telling you that it wants to go lower. Okay? So this is the dominant super shallow coming through. Okay? And that makes sense if this thing were to chase, it were to go all the way down to break below new lows. This is a good way to start stepping on the gas going south. But before you do that, you may want to take a look at some of these other patterns here on a 1-minute chart. But you may not need to, because on the 3-minute chart, you see all these patterns giving you an extension extreme here. And on the 3-minute chart, this is nothing but a bar-to-bar move. And the only visible first measured move was this one here. So once this happens right over here, you're in good shape. You're in good shape because this is super shallow, and this should lead you to a huge move, which it did. Okay. Now, if you want to trail the stop, or at least look for these highs, all these highs are lower than the previous highs, right? Even on the 3-minute chart. Now, if I go up to a 5 or 10, this is virtually a bar-to-bar move. I'm going to stop here and see if there's any comments or questions before we move on. Okay. Okay. I've been trying to get a handle on the skewing and retracement percentage. As they stand alone, they can work sometimes, but it seems that it's much better to keep them in context of the big analysis, as you pointed out. Oh, absolutely. Oh, absolutely. And nothing works in a vacuum by itself, because you have little guys influencing the big guy. You have the big guys, even the bigger guys, backing up or controlling the little guys. So they all work synergistically at the same time. The best trades have, the more you do those type of analysis, the more you see the totality of the whole picture. Do I do that all the time? No. Sometimes I'm a little sloppy, and I shoot from the hip, unfortunately. But when I'm focused, and sometimes it's hard to do that at 5:30 in the morning, Los Angeles time, you want to make sure you see the big patterns laid out for you. And he says, I wasn't trading at the time, but I did. I think the super shallow retracement and right skewing would have made me think it was going up further. Do you know to trust it, to stop it there? Now, which super shallow were you talking about, Lee? The one leading up to the high? Okay. The one leading up to the high. Let's talk about that, okay? Let's talk about this guy. I'm talking about this guy right here. Is that right, Lee? Okay. Is that guy going up all the way up to the moon? Well, let's look at it and really analyze it. How much higher can it go? Well, it could go to a 361 or even the 461. Okay, go as high as 1116. But will it go that high? Remember, this little pattern here is like the 4th generation supporting structure, not the dominant. Okay, the dominant in the first level has these two lines sitting here, and once it goes to 361, 461, that's pretty extreme from the perspective of the dominant being medium deep retracements having reached its 3 and 461. That's like, oh my goodness, what's it doing up here, right? So the bigger guys is putting a lid on it. Well, can this little baby guy stretch himself all the way up to the 461 because he's super shallow and right skewing, right? Well, we looked at what came before it, okay, which is that big dominant structure and first level supporting structure giving us these two numbers, number one. Now we're going to go forward and see what came after the super shallow situation, okay? And this is important because you don't just take that and say, oh, super shallow, let me just go long. You want to see what happened after that, what followed that. Let me go back to the 1 minute chart to answer that question, okay? Remember, if you have a super shallow retracement and right skewing, what does that tell you in terms of trend strength? It is strong, okay? However, a trend can be strong and can decelerate and get weaker. A weak trend can get stronger. Let's see what happens here. Okay. Now, as you open this 1 minute chart up, you get a little bit more situation over here. And the situation you get is That was the thing you saw on the 5-minute chart. It was right-handed skewing, this thing on its way up to its 461, right? Well, not really. It took a little breather and did this on you, and then it broke above here to go higher. Well, what does that guy look like? Now, this retracement here is now deep and skewed to the left. Oh, okay, well, I guess some of the bullish edge has been taken off to the upside, okay? And now, this is deep. This is not super shallow, okay? Now, as we put in this guy's 261 over here, this guy, well, I'll throw in this guy's 261 as well, okay? Now we start asking the same type of questions. Here's the 261 combo. Okay, now forget about these pink lines for a second here, okay? Just look at this little small universe. Can price action stop here, or would it keep on going right through the north side? How do you know? What came after this? I mean, in other words, from this point C, how did it get over here? Well, there's this pattern here. Time range wise, he's that wide. This is still being controlled by him. Let's take this green pattern and extend him up. Okay. Now I want you to watch this guy's 461 for a second, okay? This guy's 461 is just slightly above this guy over here. This 461's job is to keep these two guys in check. In other words, the fact that the 261s are here above this 461 means that these two numbers probably won't go to their 361, because the 461 here needs to stretch out to meet him halfway. Okay. Now in this case, the 461 did get stretched out to meet him to meet these two guys instead of stopping right here in the middle somewhere. Why? Here's why. The next pattern came through as a right skew. 1, 2, 3, 4 bars down, 2 up. So instead of stopping here, it went here. Okay. Yes, the 461 is still in control. He got stretched out a little bit to meet these guys, 261s, but he did not allow this guy right here, which was the super shallow right-handed skewing. This guy was unable to go to his 361 because some of the local 461 is already outstretched over here. Does that make sense, Lee? Okay. So even though this was looking strong, if this were to go up here and then like this, sure, it'll go, this thing probably would keep on going to its 3 and to its 461 because he's super shallow and it's stepping on the gas. But that's not what happened. What happened was it came here and then did a left skew and a deep retracement, and then another much deeper retracement here. And you can see the time range getting narrower. Okay, this is time range is wide here, narrower and narrower yet. Okay, so but here's the kicker right here. This little baby 461 is hiding in here on a 1-minute chart, and mathematically he's slightly above 1012. Above here is okay. Now I was jumping the gun. I shorted right here. Okay, I absorbed all of this stuff over here, knowing that that would be a benign move. Now why did I short over there? Here's I use this guy's 361. Okay, right here, 11 and a half. I said I'll take this. If it goes to the 12, that's fine. Actually, it went to the 12, did this, and went through the 12 to accommodate these guys. 261. Remember, 261 is the minimum that it wants to do if you're coming off of super shallow right skewing. Okay, and guess what? All right, he was achieved. It was achieved just minimally. This is the 1-minute chart coming in to answer that answer those mini questions, right? Does that make sense, Lee? Okay. Yeah, that's what we're doing. We're trying to, I mean, you're right from the beginning. It could go all the way through. But as you watch more and more, grind it down and say, look, I know what it can go. It can go all the way up there. But will it do that? I'm hoping it wouldn't. So when these patterns show up, you say, how deep? How skewed? Then you can kind of say, ah, yeah, right? Tony says, am I spending too much time analyzing every chart in every time interval? Well, you start with the bigger ones first, Lee. I mean, Tony, okay? And then what you do is once you have a dilemma that you need to answer a question, then you grind it down. But you don't just grind it down or go up, willy-nilly. So as we go over here, you want to go for the 15-minute chart. And then we see, again, 2 and 2, 2 and 3, 3 and 3. In the end, we were looking at maybe a 3 and 3, 361 combo, and somewhere in the middle for a short. And then the local patterns need to play in here. Well, remember, as you go higher and higher, you're getting more and more overbought. Okay, you're getting more and more overbought, which means this is a kind of pattern that usually will not go to its 461, 461. So the 3 and 3 is here. The next one is 3 and 4, and that's usually it. Unless locally over here, we didn't get what we saw here to tie in the numbers over here. Okay. Anyway, this thing started to fall pretty quickly, and as we started to fall very quickly, what happens? Well, we can see on the smaller time interval chart, you get super shallow, super shallow. As this thing starts screaming down below here, what happens? Let me go to see if there are any questions here. Okay, James says, I often notice the very last retracement before the movement and yield use a 161. Yeah, when you see a 1.618 single-sided extension, James, that's usually because it is skewed to the left. Usually that's what you get, skewed to the left, because normally about 80 some odd percent of the time, it'll go 1 or 2 ticks higher, but it can reach up to the 1.618, but it won't go to the 261 if it's a left skew. So watch out for that and see if that's true. All right, let's take a look at this from a bigger chart perspective. What happens? Okay, 60-minute chart. Okay, so you're coming down here, okay? As you break below here, what happens? Well, it's a right skew, so you're going to cut right through. Now, as you're cutting right through here, you're moving 25 points from here to here, okay? Now, can it go a lot deeper because it's left skewing? Wait a minute, this time range here is still being controlled by this guy over here, right? In other words, the dominant is this one over here, and the first level supporting is this one over here. Now, looking at the retracement, they're both very deep. So what do? I do the 261 combo, right? I take this guy 261, and I take this guy 261. But get this, before you reach the combo for a bounce, here's a combo, okay? Theoretically, this thing should come over here and then bounce, right? It is right skewing, isn't it? But here's the rub. How do you know it's going to come down to this average here before bouncing? Or better yet, how do you know it's not going to go down to the 361, 261 combo or 3 and 3? How do you know it's not going to go all the way down? Now, we talked about the first combo as a 2 and 2, right? But even before the combo, this is naked by itself. In other words, you can use that one and ask the question right here. Is there going to be a bounce right here? After you ask that question, and let's say the answer is no because it's going to come through very, very hard, then the next question is, will it come to the first combo? Now, once you get to the combo section, the bounces should be better, should be much more sustainable. Okay. In other words, once you get over here and ask if there's any, what you're asking for is there any little baby patterns coming into this number here for a bounce, or to terminate if you're short, better grab profits at the utmost area over here. Okay, that's the question you want to ask. So, first real bounce happens between here and here. It could actually be much lower than that before the real bounce happens. So to answer your question, James, this move over here is going to go through, is it going to do all that? Or is it going to come down here and at least achieve this combo before going up? Well, let's take a look at the second measure move here. What kind of skewing do we have over here? Ferociously to the right. Okay. Now, if there were to be a bounce right here, it would be naked by itself, the 261. We expect it to bounce, to come over here at least, and drop down over here before bouncing. It may drop even further to the 3 and 2 before bouncing. Okay. But again, what determines that? How do we know it's going to be a 2 and 2 or 2 and 3? The answer, the next level supporting structure, right? So now if this thing were to come down below here, this will be the next supporting structure, and we're going to see what this guy has to say in terms of, well, actually, I'm sorry, the first combo is the first combo, okay? But the first combo or the second combo will be determined by this brown piece coming here to see if there was a bounce. But before the brown piece gets confirmed, and by the way, the brown piece has not been confirmed yet, that's just where I think it's going to head towards. Before the brown piece gets confirmed, which will clearly, we will clearly be asking this guy to contribute, meaning for him to solve the riddle of whether this combo will cause a drop or not, or the next combo, right? But before we talk about combos, again, let's talk about this guy by itself. Can there be a bounce at 1090? It is one Fibonacci number, not a combo, okay? Now, at first blush, you might say, I don't think so. This is coming down way too strong. Look at this right skewing, okay? It might bounce a little bit, but it might drop faster. Well, that little bit of bounce may also be worthwhile if you choose to. Now, you may not choose to, but I'm just saying this is a good place to take your profit if you're still short, okay? Not only because of this guy over here, because of what? The next level supporting structure. And what would that be? That would not be this green pattern here, because this green pattern would contribute as 261 down here. By the way, when I talk about the next level, the third level, I'm talking about these measure moves that are in the mood or in the position to contribute their extension extreme. So this green one, he's saying, look, my extension, my very first one of the 3 is down here. Do you want to partner up with me? If so, then we're talking about a bounce over here. Well, what we're saying is that, thank you, green pattern, but we're not going to use you yet. We're going to try to look for what Mr. Blue pattern has, what he has to say first. Because if that blue pattern shows up, super duper extension extreme into this 261 area, then this blue pattern will have its extension extreme partner up with this guy. So the bounce would be here and not here, okay? In other words, if this thing were to bounce here and get shortchanged to not go down here before bouncing, then this would offer some extensions to help out this guy. And guess what this blue pattern needs to contribute? A 261, a 361, or a 4? The answer is 4, okay? That's the only thing that can prevent it from going to the first combo before the bounce. So let's go down to a 10-minute chart real quick. And when we see the 10-minute chart, now why do I go 10? Why do I go to the 2-minute? Because I want to go as big as I can to still see the minimum extension here. Now here's a 1 bar up, 1 bar down scenario. This is super shallow. Now if I were to extend this guy all the way down, now I'm using his 461, okay? Now this 461 combines with this big pattern's 261 for a bounce. Hey, there should be a bounce right over here. Why did I go through a little bit before the bounce happens? Couple of reasons. Let's go back to the 60-minute chart. So there was a little rinky-dink, super shallow guy here that went all out to his 461, and even he got stretched out a little bit to meet this guy, and he still got a little stretched out for the bounce. Why? Again, because this guy here was skewed way to the right, and the blue pattern was super shallow. Okay, would it bounce? Sure it would. Would it be an easy way to pick that low for a bounce? I don't think so. As you can see, it went through a little bit. Okay, even though it was a 461 here, because he's super shallow, right? So let's take a look at that and observe it even smaller on the 3-minute chart. On the 3-minute chart, what we have is this guy coming in, and again, he went all out. He's super shallow. By the way, he's wider than this guy right here, so he's the guy in control, let's say. Again, this is not really a good way to pick a low. You don't want any supporting structure to be that super shallow, and you don't want the supporting structure to cut right through its 261. Does a little super shallow. Cutting right through the 361, almost hit the 4, and here's what happened. It suddenly did a extremely left skew for you, okay? Now, this left skew is this pattern right here in brown. By the way, how deep is that retracement? It's still super shallow. But what? He skewed to the left. He skewed way to the left. And having seen that coming into a 461, will the 461 cause a bounce along with this 261 from way back? Oh, yes, it should, because of the left skewing. But it's still super shallow. Okay? So in this case, the good news is that it's skewed way to the left, which is one of the main ways of a trend coming down and ending. The bad news is that we just got nothing but back-to-back super shallow, which is why we resort to the 461. 1, 2 up, 1, 2, 3, 4, 5, 6 down. So do you buy it here? Well, if you did, you got to take a little bit of heat down here. Okay. But after it's done, it started to go higher lows, higher highs, and then this starts to make this move up. But this upward move was brought to you by supporting structure that was super shallow and having to stretch out to its 461 and then some. Okay, so was there a bounce? Yes. Was there a big bounce? Well, again, it will bounce, but then again, we have the super skew to the right situation. And how does a super skew to the right situation end? With a skew to the left situation. I expect this low to be taken out. So what we have here is a kind of a bounce against the trend, because this is not the end of this downtrend yet. We're not using a 261 combo from the big pattern. We're just using a 261 by its lonesome and some really teeny tiny 461 off of this. In fact, this is so teeny tiny, it's just virtually a bar-to-bar move from this perspective. Not a very good place to buy because you don't get the accuracy. You never know how big of a bounce you may get. Well, how big of a bounce did you get? Let's take a look. 5-minute chart tells me that when you look at this like this, if you were long, you want to be sure that you're going against a trend, the downtrend that hasn't played itself out yet. So when this thing moves up to a 261, and then you suddenly have this wider time ratio up. Okay. Let's do 261 combo. That's when you start doing this. And now I'm going to get rid of the 361 for the time being. Okay. I'm going to think 261 and 261 average. Okay. The average here is somewhere in the middle here. Now, because this up move is, shall we say, a little gimpy up move based on it having gone 461, this 261 combo is a good place to get out. Now, would you initiate new long positions here? No. No, not at the 261 combo. Looking at it from another way, just to excuse this guy here and get rid of him for a second, you can look at it in a different light, and that is this. Look at this guy as if he's just a pattern by itself, deep retracement, having a little speed bump along the way, reaching its 361. Will it reach its 461? Well, probably not. So this thing played itself out to its naked 361. Okay. So if you're still long here, James, I don't know, you got to be careful here. The dominant structure of 361 is being approached, and his 461 isn't that far away. Okay. It's just a little bit, so you're going to bet these last 4 points up. It's kind of in, the latter stage of the move at the end of the day. So it's not, this upward move is a tough climb, okay, because it's off of a super shallow supporting structure going all the way down to its 4. So a short over here would be good. If you roll out a couple of super shallow, you find yourself at some extremes here, good place to take profit. Would you actually go long? No. Well, if you catch this low very, very tight, you can still do that. Okay. If you average the 2 here, you might get in at 1090, 1091. The actual low is 88.75. Call it 89. So you'll be getting in a couple of points of heat. Okay. Now, if that's the case, why did this make such a decent sized move, point-wise? Well, let's see what's driving it in the beginning. Going back to the 30-minute chart, in fact, let's go to the 60-minute chart, okay? Remember, this was a deep retracement dominant, okay, although skewed to the right. You get another deep retracement, okay? Now, I'm not saying this is going to go deep as well, but even if it were kind of get truncated somewhere, this should still give you a decent sized amount of points, thanks to this guy being deep and this guy being deep. Sure, we're using just one number, the outer, the more senior, the more dominant structure, 261, and not use a combo of the second one shown in blue. We should, but we're not doing that because why do I say we should? He's right skewing. This one ought to go down at least to 261, and that's what's going on right now. So that's how this low stopped and gave you that counter trend bounce. Okay, let's see if there's any final comments or questions here. Okay. Okay. On top of the buy zone. Okay. Did I answer your question there, Tony? About you were saying you got a lot of extensions there. Well, I did not do any of those last local moves. I just got in. Okay. So I took 1.5 points of heat, but the thinking was, if you want to fine tune it, you want to squish it up a little bit, and you can get in a lot more tighter. But if all of a sudden some double left-handed skewing were to come in, you would have to shift your sell limit order a little lower just to not miss it. Okay, Don says, I showed the 87% at 1091. 87%. You know, can you use it with a 61? I don't use the 87% retracement, Don. And that's like in some kind of no man's land. But you can. But the whole idea is that I felt very uncomfortable buying it when it's falling like this. Even though I know we've gone beyond 461, I'm thinking, well, geez, it's got to hit the combo. It might bounce here, but how big of a bounce can we get? Well, the answer is that pretty big, but I still didn't trust this bounce because it should have come to this average before the real bounce happens. Now, if the 461 was somehow situated where this extension, 461, ended up right in the middle here, now I would like it a lot better because now this 461 is sandwiching two 261s, but that would be better. In this case, it wasn't. It was just on top of or collaborating with or partnering up with the very first 261 and not the average of the two. Why would the average of the two be better? Because you got two 261s reinforcing each other. At the 1090.22 level, this guy hasn't played itself out yet. And it's looking like it should because of the ferocious right-handed skew. Right? So how big of a bounce can I get at 1090? Not very big. Do I think it was going to be a bounce? I was watching for the bounce to go short, but in the end it was kind of going up a little strong, so I didn't bother with it. But the key is that you want some of these local patterns to help out with some of these senior 261s. But if you see it in the middle of it, you have this glaringly obvious pattern that really screams like it wants to come down. And by the way, normally this would not stop here and go all the way up like this without a left skew slowing it down the next time, okay? Which means this thing needs to be broken before a real bottom happens, if there is a bottom, okay? Actually, there should be a bottom because we're gonna look for a bottom at some of these combos. Let me throw in the combos for you. First scenario is a 2 and 2. We talked about that, okay? And the second scenario is 3 and 2. So I'm going to go into 3 of the dominant and 2 of, okay, so somewhere around here, there should be a bounce. Now, if I see something over here, again, a little 461 or a bunch of 361s with deep retracement coming down over here, that would be a good place for a buy. That could lead to a decent sized move, depending on if it pulls back a lot here and then go up. So that would be a good pattern over here. Now, why do I do this? Because of this right-handed skewing. Okay. Now, again, locally around here, it needs to show how this can come together for that bounce. But before the 3 and 2, there would be the 2 and 2. And again, we're looking for some 461s to lock it in if we want to think about a bounce. If there's no 461 and there's super shallow coming in, we're going to say, no. I'm not going to use the 2 and 2 to get out of my short or to go long. I'm going to resort to the 3 and 2. If that's still not good enough, we're going to resort to the 3 and 3. Okay? The 3 and 3 is going to be down here. Let me get rid of this 4. Okay? The average of the 3 and 3 is somewhere around here. Okay? This thing comes ferociously down. Okay? But this area right here is, again, from a single perspective, is close to this dominant structure is 461, which is, again, very, very extreme, right? So some of these areas where a bounce may happen. My thinking is that it would be a 2 and a 3 combo. But again, I don't see what this third pattern looks like. I can see it's looking like a left-handed skew. Okay, let me see if there's any other questions or comments, everybody. Okay. So downward move is here because we're playing out the 5-wave pattern. As we play out the 5-wave pattern, we want to pick a low to go higher, maybe, depending on what the third level and the fourth level is doing to these combos. Tony says short at the 261 combo of the retrace, right? Yeah, you can do that. You can go up here and short it if you see a good pattern for you to short it with. Would you go short now, anticipation of the drop? Well, let's take a look. Let's see what happens from here down to here. What does this look like in terms of trend strength? Let's take a look. I'll go down to the 10-minute chart. I'm going to erase all of these stuff over here. What do we have so far? What do we have in terms of retracement? Is this a deep or shallow retracement? Is it more than a 38 or less than? It's way less than 38. This is a super duper shallow retracement heading south. To answer your question, yes, it looks like this one is not really having a lot of luck going to the north side. Well, here's the next question. Will the 78 hold? That's the first thing you want to watch out for. Would it cause some bounce or would it cut right through it? Okay. Well, it tagged it a little bit and then we'll see. Okay. Will this cause a bounce? Let me go to the 5. Now, again, it's super shallow, but even as a super shallow situation, it is still skewed to the left. And I can still use this extension and say, aha, 261 into the 78. Is it going to stop there? I can take this guy over here and extend him down to the 461. Notice how this 461 got overstretched. Okay. As we get into, so you can average some of these guys for a bounce. Will you think about a big bounce? No, not really. Because the so-called dominant pattern that gave us the 261 with the 78, again, is super duper shallow. Okay. Even though skew way to the left, super shallow. This 461 got exceeded because the 261, this is not a very good buy, by the way. Okay. Well, if it's not a very good buy, could this be a short? Well, if we somehow get out of the grips of this 461 by going wider, then that may be the case. This may bounce here and go sideways and test the 78% of this range here, possibly. Okay. Or it can just go halfway like this and then roll over, thanks to this dominant structure being super shallow. So I'm thinking more bearish. And do I think there's a bounce at the 78%? Possibly. Could that be it? Just a couple of points? Yeah. Sometimes that's all you get if this thing is very fixated on going south. So this is not a very good bounce here for a buy. Although the 78, a lot of times, price action would pay homage and pay respect to the 78 by bouncing. But it might be a little baby, little teeny tiny bounce only. Okay, we'll stop recording here.